specific sector, like colleagues said. So what can we do? And could blended finance, the mixing of concessional capital with private capital, be an answer to that problem? At FAO Investment Center, we don't invest ourselves. We advise investors and help them to do more and better in the agri-food sector. And over the last 4 years, we've actually helped financial investors to set in place or invest into such blended structures. And the answer to the question is that it's actually a bit too early to answer the question. Just because many of these initiatives are fairly new, and the jury is still out there. But still, we can share some lessons learned, and I agree with the colleague who talked before. That's indeed something very, very important. One of these lessons is that it works. Like we've seen examples where the provision of concessional capital with some de-risking tools was really instrumental in the mobilization of more private capital to finance both sustainable and additional agri-food projects. And I think we are lucky to have the fund manager of Agri in this room, which is a blended initiative backed by the European Commission. And that's one of these success stories. So that's encouraging, but is it enough to scale up and reach the figures we saw before? Well, time will tell. But in the meantime, what we can see is that mixing different investors with different culture, different objectives can be a challenge, especially in terms of corporate governance, right? How do you set up an efficient corporate governance which keeps all these different stakeholders happy? That's quite a challenge. We've also seen that it's been more easy to satisfy investors' risk appetite or lack of risk appetite than investors' returns expectations. And that's maybe a place where more could be done. And lastly, the financing of SMEs is clearly a segment where you have a lot of investment opportunities, especially in Africa. But it also comes with the cost, because financing 10 loans at 1 million euro is going to be much more than 10 times more expensive than one single loan of 10 million euro. So this comes with a cost, and it needs to be addressed if you don't want to deter the private investors. Based on that, what advice can we provide to both concessional and commercial investors? Well, the first one is to clarify whether capital mobilization is a priority or not. And who are you targeting as a co-investors? TFIs, donors, foundations, pension funds, family offices, bank. That's crucial because everything, or almost, in your fund or vehicle will need to be structured in function of the profile of the co-investors you target, in terms of corporate governance, in terms of legal framework, and also a big part of your investment strategy. 3, don't reinvent the wheel. Setting a new investment fund, blended vehicle, can take a lot of time and resources, a lot of investment opportunities out there. So look at what's available, and when you invest into a fund, don't expect to revolutionize this fund. You're likely to be disappointed. When you invest into a fund, you also invest in a fund manager. 4, be flexible. A certain level of specialization is good, but sometimes there is also a tendency to have a very narrow investment strategy which can make capital allocation slow and difficult. So that's also a very, very important point. Don't expect one single project to tick at once all the development objectives you have in mind, from gender to climate impact to supporting smallholders, etc. 5, keep it simple. The very logic of blended finance should be to facilitate financing, not to make it more complex. And here maybe a common mistake is to think that the provision of concessional capital is going to immediately attract commercial investors and vice versa. It's more complex. So really keep it simple in terms of corporate governance, in terms of monitoring requirements, in terms of reporting. 6, we saw before that tackling risk appetite was easier than return targets. And that's partly because of the high transaction cost affecting the financing of agriculture. So think about how can you tackle these bottlenecks, which are well identified. Think about maybe if you're a concessional investor, how can you cover part of, I don't know, the FX cost to hedge the foreign currency and risk and incentivize investors to provide more local currency when needed. Maybe cover some of the costs associated with the management of collateral, things like that. And the last point is what's also quite striking is the consensus among both concessional and commercial investors about the importance of technical assistance and knowledge, because knowledge is really perceived as a very strong de-risking tool as well. So that's it. Actually, this material is going to be summarized in a brief which FAO will publish soon. So if you have any question, any comment, please don't hesitate to come to me, write to me on that email. And thank you for your attention.
Thank you, Alex. As I said earlier, we will see Alex back this afternoon when he will be moderating a panel. I thought this chart on management fee and expenses and loss rates was very, very interesting, and I hope somewhere this afternoon we come back to that and better understanding where that comes from and what can be done about that. Last part before lunch is a panel conversation. We're focusing in now more in the micro. How can we boost profitability at a farm level? So from very high, we go now a little bit back to the on the ground. I would like to introduce Philani Mzila. He is who's going to lead the panel. And Philani is an investment manager at Founders Factory Africa. He's there currently focused on building and scaling fintech, health tech, and agri-tech ventures in sub-Saharan Africa. So that's a different generation than mine, clearly. He's also an academic, and I'm sure I'm going to learn a lot of stuff from this discussion. Welcome, Philani. Good to see you.
Good.
Maybe we can try to keep...
Hello. Can you guys hear me? Great. Thank you, everyone, for joining us in this session. I have a very exciting panel today of deep sector experts from across the continent, so I'm just going to ask them to come up, and then we'll do short intros at the beginning. So I've got Geketso Chalatse from Lesotho Millennium Development Agency, Seelan Gubulsami from Omnia Holdings. If you could please come up. Mamati Tembe from Bayer in the Africa division. We've got Ousu Akoto from FreezeLink in Ghana. We've got Sane Steamers from Afex Commodities Exchange. And then lastly, we've got Tobias from BayWa. I think that's the right pronunciation, from out in Germany. I think you can give them a round of applause, please. Great, amazing. So, as you can see, we've got quite a diverse panel to my right-hand side, so I'll allow us to do just some brief introductions. And just to the panel, I think let's try be as informative as possible, because I think the audience is looking for a lot of more practical solutions rather than academic solutions, so looking forward to the discussion. So I think Tobias at the end, please go ahead. You just need to press that.
Oh,
Yeah.
okay, now it should work. Short introduction of myself. I'm Tobias Fausch. I'm the CIO of BayWa AG. We're a German company which is 100 years old and in ag since the beginning.
Go ahead.
Great. Good afternoon, everybody. My name is Seelan Gobel-Samy. I'm the CEO of Omnia Holdings. We are a business based in South Africa. We operate across a number of continents across the world. In essence, our business is 70 years old, and we focused on using ammonium nitrate, not only for agriculture, but also for explosives. And our purpose is to make a difference, a positive difference in all of the countries and territories that we operate in. Thank you.
Good morning, all. My name is Mamadi Tembe. I'm the head of Public Affairs, Science and Sustainability for Bayer here in Africa. Bayer is a company that's focusing on life sciences, health, and agriculture globally, and then we have a significant presence here in Africa, and we'll talk about the different countries later. Thank you.
Good morning, ladies and gentlemen. My name is Keketso Chalatse. I'm the Chief Executive Officer for the Lesotho Millennium Development Agency. We are in partnership with the Millennium Challenge Corporation, which is our donor from the US government. Thank you very much.
Hello, everyone. My name is Owusu Akoto. I am the founder and CEO of FreezeLink. FreezeLink is a cold chain logistics one-stop shop based in Ghana with the scope of West Africa. And we are working on building West Africa's first third-party cold chain logistics network. Thank you.
Good morning, everyone. My name is Sana Stemers. I'm here from Nigeria on behalf of AFEX. AFEX is a commodities exchange that's just 8 years old, but has grown in 8 years' time to provide supply and demand matching for over 800,000 tons of commodities. We provide services and market access for over 400,000 farmers. And we have recently launched an investment arm as well that raises working capital for processors and traders.
Amazing. Thank you all for joining me. I think let's get right into the discussion. Keketso, I'd love to get your take on what you think, or rather the role that policy plays in ensuring like grassroots profitability from a farming perspective. What do you think are the enabling factors from a policy perspective?
Thank you very much. Policy plays a big role in the agribusiness because it sets the stage for the role that the landholders can play. It also sets the stage for the role that investors can play. Overall, it plays a very important role in anchoring the economy of the country. Thank you.
No, amazing. Sani, I'd love to get your take here. So we obviously have quite a few, I guess, policy efforts, but from a, I guess, practical perspective, do you think that smallholder farmers should continue as is to achieve profitability, or is there an opportunity to consolidate themselves to access larger markets?
Thanks for the question. I think the answer to this question, and to be honest, a lot of questions in this sector, is really in segmentation. What we see globally is that smallholder farming, if done well, may provide enough income for one person, but not necessarily an entire farming household. Especially if you add to the mix that farming households tend to be large families. It's hard to feed an entire family just based on a 1 or 2 hectare farm. We have data from different African countries, from different crops, and we basically see that at least 5 hectares is needed to get farmers above the poverty line. And those 5 hectares would ideally have 2 or 3 different crops and a bit of livestock on the side. From 20 hectares and up, we can farm more commercially. We can introduce mechanization, we can introduce more efficiency. And those are pilots that I do feel are needed. In Southern Africa, farm sizes start from about 10 hectares. But if you look at West and East Africa, where we're active, there's a long way to go, and that's definitely one of the things that we feel we need to make progress on.
No, great. Thank you for that. I'd love to get your take here, Seelan, on some of the work around inputs that you can do in terms of, or rather to maximize farm profitability. Sure.
Well, maybe let's start with the farm itself. I think what we know that a lot of land on the African continent is semi-arable. So the first thing farmers need to focus on is to ensure that they are incredibly efficient, and efficient not only from a cost perspective, but also efficient from a sustainability perspective. What we've done is we've put a number of processes in place that actually help farmers, one, analyze the soil, ensure that they use the required amount of water and nutrients, and not more, you know. So we have probes in a number of our customers. Those probes can determine the soil moisture content. They can also, we analyze the soil. We do that in a number of countries across the continent. And, you know, just to give you a small anecdote, we're able to predict the accuracy or the crunchiness of an apple from the sap of a 6-week apple plant. And that just assists our farmers to be precise, to be accurate, to use water carefully, to use nutrients carefully, and also, you know, to look after the environment, because the more efficient we are, it enhances the farm's profitability, it reduces the cost, but it also is more sustainable for the environment. And we know ultimately that all of that needs to come together to do good for our farmers.
Sticking with the theme of inputs, I'd love to get your take, Mamati, on sort of the role that biotechnology has to play in terms of improving the seeds that we have, the seedlings that we're planting, and sort of how that links to increasing yields.
Thank you very much. I'm glad that you touched on the seed, because that seems to be one part that is usually neglected and is a foundation of all that goes into the field. When we talk about the African perspective, before we even talk about biotechnology, there's a lot that we actually do as an organization to ensure that the quality of the seed that goes into the ground, it's of high quality in order to improve profitability, actually. And then also how the whole plant is taken care of, that is very important. And coming back to biotechnology, it's one of the technologies that has actually helped many farmers in the world. South Africa is a beneficiary of the impact of what that technology has done. So there is a lot of data and a lot of really good incomes from a wide spectrum of farmers. It's one technology that even smallholder farmers were able to get the massive benefit. So that's where we are really excited and looking forward to the opportunity of having other African farmers having access to biotechnology seed in their country so that they can improve profitability. But maybe just to add one little point is that because the technology is already on the seed, even in cases when farmers are not very strong in the agronomic practices, which we focus on strongly, they already benefit. It's not the only solution, but it's a very, very, very useful technology that really creates a leap just at one farmer level. Thank you.
No, thank you for that. And I mean, you touched on technology a few times. I just like to ask a follow-up there is like, what are you seeing from an adoption perspective from farmers in terms of technology and enhancing their yields through the use of, I guess, digitization?
I will quote one farmer once. He said, "As farmers, you fool me once, but if I keep on using it, then it works." And what we're finding is that for one of the things that we're focusing on as a company is also on the data science. We use a lot of digital in order to help the farmers to really be precise. When you look at the large-scale commercial farmers with the field view, they're actually able to see their fields, and they're able to know that we don't have to probably spray the whole field, but we're much more specific. But when it comes to the smallholder, one of the big difficulties is access to that innovation. As a company, we say we have innovation, but it's not available there. So for them to have access to it, we also have to look at the way of distribution. What is the last mile? That's what we call it. Because many of them already spend the money. They just spend money wrongly, or they spend money on the wrong things. So how do we enable the farmers to use that money very constructively? If you're planting the seed, how well do you plant it? It's something as simple as many farmers will plant 3 in a hole. I know it's very basic what I'm talking about, but it's the reality of many. A lot of money that's being invested, how does it get spent? But when you sit down with a farmer to say, yes, this is the technology, but this is how you use it. And also working with communities. We have like some entrepreneurs, which becomes very easier with digital because we work with them in a digital platform. We incentivize them to actually go to the ground. They also work with the farmers. They teach them how to benefit from that technology. So from the seed, from crop protection, from biotech, from digital, but not just alone as an organization. We found that we're working in the whole value chain with the different stakeholders, some from the input, some from the output. So the idea is that the solution is not going to come at once, but where we can hit hard, let's maximize on that, because seeing is believing, and then the more they do, the neighbor sees and he learns from it. So it's a little bit of an ecosystem approach rather than just a one product focus.
I love that. Seeing is believing. I think a lot of farmers sort of share that sentiment. Tobias, I'd love to get your view on one of the other constraints that we haven't really been paying attention to, water scarcity, right? So what are some of the things that farmers or solutions that farmers can implement in order to use less water resources to get the same sort of outputs?
Well, thanks for that question. Water is really scarce. It's a problem in many places in the world. And one of the things is that a lot of water is used in agriculture. But pretty often, that's what we see is the farmer does not really know how much water to really use. So what we have developed over the last 30 years is a plant growth model that actually calculates how the roots grow, how the leaves grow, and we can make yield predictions in tons per hectare with that. But because we have such a model, we can simulate what happens if you irrigate how much, if you use nitrogen, how much, and when, depending on the plant growth, depending on the weather. So what we have done, for example, in Zambia, we have a farm that we support since 2017, and we could show that while reducing the water consumption by 30%, we still increased the yield by 25%. So it has a massive positive impact in both directions. Less water, less input, less cost, but still optimizing the yield.
No, great. And so we've spoken a bit about inputs now, and I'd love to get your take, Owusu, on we've now grown this product, we've got the commodity. How do you look at sort of aggregation and distribution playing a role? And I'd love to get your sort of anecdotal evidence from the Ghanaian environment and the West African environment.
Yeah, thank you. So it's a great question because you may have great seeds, great soil, but then what happens to the rest? In some value chains, we have 60% post-harvest losses. I was on a call last week with a contact in Ivory Coast. They have 60% post-harvest losses in mango in that country. So, imagine if 60% of phones that we pay for some reason, didn't get to our palms. So the bit about the storage and the transportation is so key. So I think that there are a few ways that we look at it. One is around the innovations, the technology innovations. So we're working on a project, which is the World Bank funded project, in the Cotonou International Airport. So what we are doing is building a refrigerated terminal for fruit and vegetables, which will enable farmers in Benin who are growing chili pepper, mango, pawpaw, pineapple, to pre-cool their produce, which extends the shelf life, and then enable them to tap into the high-value markets for fruit and vegetables. So infrastructure, as some of the speakers spoke about, you can't get away from infrastructure. Cold chain is an interesting space. I think that in 10 years' time, will look at this particular point in time and think this was a special time for cold chain in Africa, because you now have modular cold storage solutions, which are quicker to install, they are easier to maintain, and they're tried and tested in Africa, but they're not equally distributed. So you find them far more in Southern Africa than East Africa, and in West Africa, almost nothing there. So there is a huge upside for us. Secondly, the innovation comes in terms of energy. So we happen to work in the food sector and the pharmaceutical sector. We distribute everything from vaccines to ice cream. But we see that the biggest opportunity really is in the fruit and vegetable sector in West Africa, because that is where you see the biggest poverty of cold chain, the chill chain. And so, if you imagine the farms around sub-Saharan Africa, how many of them are connected to the national grid? So solar, in as much as batteries and panels on the long term continue to go down in pricing, a very crucial part. And then the third and final answer I would say is around business model innovation. There are companies who are also doing cold chain that are focused purely on the EPC side or purely on selling assets. But how do you tap into even those farmers who have high potential to do export markets where they don't happen to have $1 million or $2 million for, let's say, 1,000 square meter pack house with cold storage inside? So we are looking at that issue in terms of owning and operating assets and delivering cold chain as a service from the farm to the palm of the customer, whether they are local or whether they are international.
Sane, I see you nodding vigorously. I'd love to get your take on what are the trends you're seeing from the Nigerian market with regards to aggregation and distribution.
Yeah, I think it's something that I recognize. Storage, I think, is key for a number of things. Food waste is a real issue in many countries due to bad infrastructure, but also price volatility, glut harvest. Because a lot of farmers produce in their traditional methods, they're dependent on when it rains, and they harvest at the time that everybody else harvests. Introducing things like irrigation, introducing things like spreading out harvest, in fruit and veg greenhouses could spread out harvest, for example, is definitely something that is needed. Storage is also one of the things that we see as a definite need in Nigeria and in the other countries across Africa that we're working in. What we've seen is that if a farmer is not forced to sell at the time of harvest, but you offer him storage at a fee for maybe a month or two, not just for perishables alone, but also for a product like maize, where we just need to make sure it's not eaten by rodents and humidity is controlled. The price can increase between 30% and 40% on average, just by holding it to a time that the market is ready to pay the price and there's no glut. So I fully agree that storage is one of the important things that we need to work on to increase farmer profitability.
No, that's fascinating. Keketo, I'd love to get your take here, right? So we've spoken a bit about sort of inputs, the processing, and now we're sort of moving into the territory of outputs, right? So what do you think, or rather what interventions can be put in place to ensure that like farmers can access a wider set of markets? I mean, coming from Lesotho, a relatively small market, how do you think you can help your farmers access more profitable markets?
Thank you very much. The export market in Lesotho, indeed, is quite limited. We have a lot of smallholder farmers and small investors in general. We think that there are, like last week we were in Swaziland, we were on excursion there looking at different types of ways and means to help or facilitate export market to make it really work. We think the private entities could be established, but it's very important that government, as public sector, stands to support the export market. The export market requires accreditation, it requires certification, all those standards and requirements are very fundamental for export. So private entities may not, as smallholder farmers or as small investors, may not be in a position to meet global gap standards, for example. They need support, a linkage. One of the models that we observed, which we are contemplating looking into, is to have one central entity that would aggregate, that would take responsibility for standards and meet those requirements that are required for export, and then establish quality controls and measures internally and own up aggregated farm conglomerates, and then help them qualify. Any one of those who feel at any point in time is capable of taking it on for themselves, now looking at different, more beneficial opportunities, can do that. But that hand-holding is very, very fundamental for young investors, young farmers, to get up to their feet and then run it themselves.
No, amazing. I'd love to get before I take sort of questions from the audience, I'd love to get your take, Tobias, on how collecting data and sort of processing that can aid in assessing investment opportunities from a farming perspective. What is some of the work that you guys are doing to aid farmers on that perspective?
Well, as I said, the one thing is we have a model to calculate water consumption, water needs. We can do that for a region, so we can see if there's enough water available for a certain crop. And if you know that there's crop, then you know it makes sense to invest in irrigation. But if you would not have enough water, maybe you should go for another crop. And then you just have to take that decision. Now, if you combine these models with the climate model, or various climate models, you can see how will that develop in future. What's happening in 2050? Will we still have, if we still grow corn, if we still grow wheat, if we grow cassava or whatnot, will the climate still be favorable to have good crops? And if not, would irrigation help? And if irrigation helps, do we have the water? What precautions do we have to take to have enough water? All this can be simulated today, and you can do that for a region, for a full river flow, you can do it for a country, and that helps really take on decisions on how to develop, how to push farming, and how to become successful and have food security.
No, great. Seelan, I'd love your take as well. I think I see you're partly in agreement.
I am, thank you. I think, you know, the problem to solve is to actually get investors, you know, service providers like a number of us on the stage and farmers together. Because ultimately what you do is you reduce the risk of the investment. You reduce the risk of the financiers who are backing this agriculture value chain, which is long, you know, which goes beyond a typical business cycle, and I think which is so important for food security and what the world's population need, you know. And we heard a speaker this morning talk about Africa, you know, really being a net importer of food, which is something we need to change over the next few decades to ensure that there's more and more sustainable farming on our continent.
No, great, thank you. I'd like to open it up to the audience. If I could have like 3-4 questions for our panel. Any questions? Can we please get a mic? Wendy.
Hi, good afternoon. I'm Johan West. I'm from the founder of Green Africa Group. We are agricultural and environmental and climate change adaptation consultants. And we do work all over Africa right up to Morocco. One of the things that I noticed, as you all know, Africa's got the potential, but there are so many failed projects in Africa and evidence of failed projects. I've got a whole portfolio of equipment of billions of rands standing in countries like South Sudan and all over with grass growing through them. And I found that one of the major problems is that the funding is there, the capital is there, the will is there, but the knowledge is not always there. And there is service providers, which like yourselves, that provides fantastic technical services, but for some reason the investors or the clients are very reluctant to make use of consultants for feasibility studies, for management plans, education, training, to actually make these projects work. And now they do make use of consultants, but I just feel that is one of the major problems. There's a lot of projects that wasn't feasible from day one, and especially with climate change, as one of the speakers said, major big areas in Africa is not going to be really suitable for agriculture, or the crops is going to change. So my question is just that, I don't know if you can answer it, but it's more a statement actually, but for some reason there is this reluctance just to spend a little bit money, 0.01% of the project on proper feasibility studies, and to make sure that these projects work.
Thank you for that. I'd like to get your take, Gegetso, on sort of mechanisms like feasibility studies in terms of de-risking investments into these projects. Do you have a view on what role they play?
Yes, indeed. Feasibility studies are key to starting any venture, in fact. It's an activity in which surely some of the people who are cost conscious are reluctant to venture in. But it is a cost that one should be, any investor should be willing to pay to know whether that venture is profitable or not profitable. Venturing into farming without doing a feasibility study is actually a dangerous game, because capital costs, running costs, all those investments without the feasibility, without that litmus test that is saying this is good, this is maybe, this is you should not, then it's that cost that when we are farmers, it has to be part of the exercise that you say, I pay for information knowing whether I should do this or I shouldn't. Of course, there are different levels. You do the preliminary feasibility, and then from the preliminary feasibility study, you should get a feel of whether you should continue to do a detailed feasibility or not. Then a fairly rounded feasibility that would give you different aspects, the technical aspects, the economic aspects, is a good way to go to be able to say, I do this or I don't, or maybe in the near future. It's a good exercise to do.
No, thank you. And Sane, I'd love to get your take, but more from a grassroots level perspective.
Yeah, I think what I'd like to add there is I relate to the concern. There are solutions that exist and money is needed to scale them. I am quite optimistic, however. So firstly, also in response to feasibility studies and how do you raise those funds and what can trigger that. I'm personally a big believer in proofs of concept. Feasibility studies tend to be documents, and having been a consultant for 20 years of my career, I know that you can get a document to say whatever you like by selectively picking your evidence, right? So proofs of concept is what we should be looking at. And I think for all of us that are in the business, that are trying to raise funds to scale, we should make sure that we just start small, have a pilot, have some evidence, document the evidence, both the numbers as well as the narratives of the stakeholders involved. On the optimistic side, I also see a lot of traction on that front. I do see that there's a lot of interest from investors, both on the continent and globally, who are looking at agriculture now. And I think this has changed significantly in the past 10 or so years. There is a lot happening. With AFEX, we're currently also in the middle of a debt and equity raise. And we are seeing a lot of traction in that area. So I do agree. I do agree that more money is needed. We also see that agribusiness is a very small percentage of investors' portfolio currently, especially compared to the GDP value that it has. But I see a trend that's going in the right direction. So I'm quite positive. And I think it's up to all of us here to make sure that we have the proofs of concept and actually sell the message better.
Great, thank you. Okay, I've been told time. I think let's have a few closing remarks from the panel. We can start at the end there with Tobias, just on your thoughts on the panel and thoughts going forward.
Well, I think what we saw it in the morning, we saw it in this discussion, that there is a lot going on. There's a lot of options, of opportunities, but it's very hard to bring it into the field to really have the success. And it's a very complex problem also. You start with infrastructure. You have to deal with political boundary conditions. You have to deal with farmers who are used to do it that way, and they need to be trained, and they need to understand that you have more modern ways of doing it, which are more successful. So all in all, it's a very complex topic, but there's a lot of initiatives going on, so that's very positive.
Great. Seelan?
I think just in closing, I think it's important for all of us to do our little bit to make sure that Africa gets access to the best, world-class and latest resources and technology. So I think as Omnia, we ensure that whether you are a large commercial farmer in South Africa or whether you are a subsistence farmer in Zambia, you are getting the best of breed of technology, of science, of data, and that is shared across all of our continents, our countries, and the markets we operate. I think it's really, really important that we find solutions for this challenge of getting us to work together, getting us to do what is right, not only for the farmer, but for the country, for the communities, and for the environments that all of our stakeholders operate in.
Thank you. Mamati?
Thank you. One thing to always remember is that whatever decisions that we make, even in the investments on the projects, is just to imagine the impact at one particular farmer at a time, regardless of scale. And also the conditions that those investments come with. Because at times we have a project, if it doesn't work, it's mostly sometimes with the detail, the assumption that were made in the implementation. That is where sometimes we are left out, because we come as a supplier and then you think, this is what I'm going to focus on, but it's actually the whole system. Just one remark, there was 5 million for a community. Everything was on point, the training was fine, all the stakeholders came in, but the one stakeholder was left was an agro-dealer distributor. They were expected to be the one to stock, and they did not have the funding, and then the funding did not make provision for them. So that is probably one ask to say, very practical, what happens at one farmer level, how does that farmer actually get the product? So if I'm a company, I just don't focus on my product, but how do I make sure that the innovation and the technologies are available at the last mile? So maybe that is the one message that we take with, one farmer at a time. What does it mean to that one farmer? Because whatever investment comes is only successful if one farmer at a time is successful, and that's where the profitability of the farmer comes in. Thank you.
Thank you for that. Geketso?
Yeah, I was listening to the keynote speakers this morning. I was really intrigued by the public-private partnership kind of approach. And having looked at the past experience of agribusiness in Africa, I came to realize that we surely can't, investors on their own can't push this. Public on their own cannot push this. So in Lesotho, government of Lesotho has signed a 5 billion rand compact in May this year. 2 billion of it goes directly to market-driven irrigated horticulture. So we hear the bulk of that is is a form of partnership that our donor, Millennium Challenge Corporation and government of Lesotho are saying to the investors, to the NGOs, to the companies, hey, come, let's partner together. We are going to handle the services that are associated with linking up with the investors. We are going to offload the burden of infrastructure, dams, irrigation, all institutional reforms that are associated with land, with business, all those de-risking components and deloading components are in there. We are actually here to say, hey, come, let's go and build this 2,000-hectare horticulture project in Lesotho. And we are installed 6. We can meet in the closed sessions to talk more about this. But really, we as MCC and government of Lesotho are saying, surely, as I have noted, that everybody is concerned about the rate of progress that agribusiness is moving in Africa, in technology, in cracking the markets, in cracking the financing. It's really low. Can we do something? We are prepared to embark on that game. So I would like, in ending, to say we are here to look at partners to go right in there. And the government of Lesotho and MCC are saying, Lesotho is high, no disease, less diseases, less pests. We hit the market early. We are looking for anybody who can partner with us to move on there. But otherwise, agribusiness is the way to go. Thank you, sir.
Thank you. Also?
Yeah, thank you. I'll give a quick story about a farm visit I made on Friday last week. We visited a farm which is about 1.5 hours away from Accra, the capital of Ghana. It was a mango farm. And they had approached us for cold storage for 3 reasons. One is obviously to reduce the post-harvest losses. And it's useful to just touch upon how big an issue post-harvest losses are. The rotten food will pollute the waterways. There will be foregone opportunities. And what we find in Ghana, at least, is that the post-harvest jobs tend to be for women, disproportionately represented by women. And then we also know that rotten food it contributes 8% of global greenhouse gas emissions. So reducing the losses will have a huge effect on that community in the context whereby it's not only one farmer who is using the on-farm cold storage and the pack house. The second thing is the fact that, and this is not spoken about so much, but African fruit and vegetables exported from Africa command a price which is 55% below the global average, which is such an astounding statistic for us. Yeah. And infrastructure is such a key reason because of this. And then finally, shelf life. So this has been touched upon before, that this mango farmer, if he sells his mangoes during the typical harvest season, he will sell 1 kilogram of mangoes for 2 Ghana cedis. Now, if he waits for only 2 weeks after the season, he sells his mangoes for 8 Ghana cedis per kilogram. So there is